Welcome back to the channel. Today we are diving into the top real estate market trends for 2025 that every investor needs to know. From multifamily opportunities to land development, these insights will help you stay ahead and make informed decisions. So let's dive into the United States Fed funds interest rate. The benchmark interest rate in the United States was last recorded at 4.5% interest rate and is expected to be 4.5% by the end of this quarter, according to the Training Economics Global Macro Models and Analysis expectations. In the long term, the United States Fed funds interest rate is projected to trend around 3.5% in 2025, according how lowering interest rate impact the returns on multifamily properties. Well, for a couple of reasons. One of those is lower monthly payments equal higher cash flow. When interest rates drops, monthly mortgage payments decrease. This means more money stays in your pocket each month, improving your cash flow and increasing your return on investment, also called ROI. The second, more affordable financing. With lower interest rates, you can borrow more money for the same payment. This allows you to purchase bigger or more profitable multifamily properties without a significant increase in monthly expenses. Now, let's dive into how the addition of new multifamily housing affects affordability across different apartment classes. And before we explain these news, let's understand a little bit what are the apartment classes. According to CoStar or how CoStar do it, they classify from 1 to 5, being 5 the absolute highest quality in design and construction. So this means this apartment building designs in 2024, 2025, and 1 and 2 stars means that there are the most old properties. They could be in the 19s, in the 18s, maybe if there is any from the 17s. That's how CoStar do it. But in real life, the investors do it by the letters from A to D, being the most luxurious apartments and the newest. And B is a little bit older, but not that old. C is in the middle. D and E are the most old properties. So after explaining this, let's start with the first figure. And after checking this, over the past decade, rents of 1 to 2 star apartments, so the most old apartments, have increased by an average of 3.4 annually. In contrast, 4 to 5 star apartments, which are the most luxurious, saw a slower rent growth of 2.7% per year. Interestingly, 3-star apartment, which is right in the middle, experienced the fastest rent growth at 3.8% annually. Now, how does adding new apartments affect these trends? Research indicates that in markets with higher levels of new apartment supply, like from 1 to 2-star apartments, tend to have lower rent growth. This suggests that increasing the overall apartment supply can help keeping the rents more affordable for lower to mid-quality units. So after reading the article, summary, adding new multifamily housing, especially higher-end units, can lead to more affordable rents in lower and mid-quality apartments. This highlights the importance of increasing housing supply. If you would like to check this new, you can find it in the link down below in the description. And our last trend is going to be about the US population, which growth is at 23-year high. This is super important for real estate investors, and here is why. In 2024, the US grew by over 3 million people, with the big growth happening in the states of Texas, Florida, and California. A lot of these came from people moving to the US, which means more demand for housing in this area. But what this means for investors? More people means more needs for homes. As cities grow, the outskirts of these areas are becoming great spots for land development. If you can grab land now, you will likely see property values raise as these areas get developed. The bottom line, population growth means more housing demand, and that's where the money is for investment. Keep an eye on these growing areas for great investment opportunities. Which trend do you think will have the biggest impact in 2025? Comment below and share your thoughts. Don't forget to like and subscribe for more market insights.